Welcome to this week's Mortgage Market at a Glance for the week of May 20th, 2024. So here's a scoop on the latest inflation data. You know how inflation has been a big deal for the financial markets? Well, the Consumer Price Index, CPI, which is the most important report every month, just came out this past week. Surprisingly, stocks and bonds did pretty well, even though the results were exactly what was expected. The market's relationship with inflation is pretty wild right now. It's been so high for so long that no extra bad news, well, it feels like good news. This report was a bit better than the last one. The key metric, core month-over-month inflation, hit the 0.3% forecast, which means inflation is still going up, but not at the pace it once was. Core inflation needs to drop to around 0.1 to 0.2% per month to hit the 2% annual target. But the Fed might cut rates before we officially get there if the monthly data shows we're likely to reach that target, or if the unemployment reaches the unfortunate 4% mark. We're currently at 3.9%. The Fed and the markets are also looking at other parts of the inflation data for signs of cooling down. One big one is the owner's equivalent rent, OER, which measures the home payment inflation. This is super important because it's a large part of the most problematic inflation category. OER is good to watch because it moves more gradually and aligns well with timely rental data from private sources. This can be a good indicator about where the inflation is headed. A lot of folks expected more progress in inflation by now because of OER trends. But OER stalled at high levels, which has been confusing and frustrating for everyone. So what's holding OER back exactly? There are a few theories, but most agree that it just needs more time. Another key factor is housing supply, especially multifamily housing, which directly impacts rent prices. New data shows that multifamily residencies were completed at one of the fastest paces in decades, even though it is just off recent highs. The catch is that new multifamily projects are starting at a much slower pace than a year ago. And if starts are running at just over 300K annually, completions won't stay above 500,000 for very long. This slowdown in new construction isn't just in the multifamily sector. Overall, building permits and housing starts have been in a holding pattern, while completions keep adding up. Looking at housing supply to predict improvements in inflation is pretty forward-thinking. And for now, mortgage rates ended the week lower than last week, even with some pushback on Thursday and Friday. In other words, rates have pulled back a bit after a good winning streak. Now sure, you could say the rates managed the winning streak because they were at their highest in over 5 months by the end of April. But let's take the win no matter how we get it. We're only going to see real improvement if the big ticket inflation data moves toward the Fed's 2% target or the unemployment rate reaches 4%. Until we get more data in early June, anything could happen with the market, but it probably won't move too far in either direction. Now this week, the Fed is on the radar and there won't be any new announcement. But there will be several speakers and the release of the minutes from the last meeting. And I'm pretty sure the markets know the Fed stance, but it's always wise to brace for potential volatility with any major Fed communication. Now, if you'd like to know more, reach out to me. I'd like to meet you. Thanks for watching. And if you're looking to purchase or refinance a home in Arizona or Texas, I'd like to be your broker of choice. Until next time, take care and stay safe.